We have the Hang Seng, which is down around 0.8% as we speak.
They have asked Bajaj Finance to stop sanctions and disbursals of loans under two key lending products.
Biden did tell Xi that they have to ensure that competition does not veer into conflict.
The next resistance for the Nifty Bank is 44,700.
I think you need to buy those intraday dips and you need to participate on the long side.
Company says they expect commencement of oil and gas production from KG Basin in coming months itself.
Q2 saw solid growth in the domestic business.
So the Midcap index opens well in the green. And in fact, that's opened with a gain of close to around 40 points.
The broader markets have delivered almost a 40% plus PAT growth.
We have currently bid for projects in West Bengal.
The best of the BOP is behind us. The first quarter, FY24, was probably the best quarter.
The Nifty quickly recover from the opening lows and the buyers come in.
It's not just about fundraising, it is about new participants coming into the market.
Underground coal mining is more environmental friendly and sustainable.
Things were quite flat. It's not like we got a crazy handover or anything, but this has just been a one-way move that we've seen ever since then.
Well, that was a day so far, and what a day it has been. Completely a bullish kind of hold on the market is what we have. You're with us here in Closing Bell. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon. In the morning we were talking about how yesterday perhaps could be the semi-final, and today could be the final. It's not the final, but 160 points after yesterday's 250 points. It's just amazing.
Absolutely. I think we've been outranking a lot of the markets around the world today, right? We had a bit of a sell-off in Asia, some profit taking in markets like Hong Kong. We have our own song that we're singing. And Europe is kind of keeping us company because some of the markets, as the opening ticks are coming in, some of them are actually up and about. So who knows? But this is just bulls on fire. That's what's happening today.
Well, that's right. And it's a very, very good-looking screen because in the morning we made this point, right? If you get a dip, intraday dip, you should participate in it. And the bias has to be on the long side. And I think at that point of time, Hang Seng were down 1.5% approximately. So it's been a rock-solid show from the Nifty. And keep in mind, the star batsman is still not performing to optimum levels. So if you get the Nifty Bank in there, that comes to the crease, feels a little good, sees the ball big, smashes it out of the park, well, then we are going to be at around 20,000 odd. Just if you pull up the Nifty Bank, I'll tell you why. Now it's trying to move a little bit higher. This is a congestion zone, 44,250 to 44,500. And if we get that line up, you get the line chart of the Nifty Bank, and you get the 50 and the 100 EMA. Just plot it. You'll see currently the Nifty Bank is trading very, very close to that particular level, and it's in that vicinity itself. So maybe 150 points more from here. Well, and we'll be at around 20,000 odd. The star performer has not performed, yet the team is doing well. So let's see how this goes.
But there's another star. There's the other star batsman, which is IT.
The tech index.
Firing away.
Absolutely firing away. So it's looking good, isn't it? And we are outperforming the rest of the world. That's point number one, because this is a global move, right? It started with a CPI number, and it's not halted still yet. So most markets, actually Asia did a little more, it was a little more subdued. Markets like Hang Seng, etc., which rallied sharply yesterday, actually pulled back 1.5%. But Europe is doing a little better. But even compared to Europe, the market here is doing, I think, a little more than those. Big moves in IT. So that's the index to watch out for. 3% today, and yesterday 2.5%. So very quickly, the Nifty IT index has added about 5.5%, and that's on track to be the sector of the week by far. Again, for IT services companies, there is, of course, the yields, etc. But that matters more for unprofitable companies, which perhaps will make money at some point in the future. That's not IT services companies. But what matters for IT services companies is that if the Fed is done with rate hikes and the economy in the US is still doing fine without any recession in sight, although people keep talking about it, that's a great environment. So that's the sort of real reason why IT services is doing well. The next level, just two levels of the Nifty, the Bank Nifty, which we put out in the morning as well. So 19,700, of course, was the first, and the October swing high was 19,843, and we are at the swing high, at the October swing high of 19,843, just like that. For the Bank Nifty, the next level is, of course, those 50-day moving averages, which Nigel was talking about, but slightly higher is the 61.8% retracement of the full fall from the all-time high to the lows, which is about less than 1% away, which is 44,700 or so, but nothing to really complain with things looking very, very green all across. Surbhi.
Yes, absolutely. And let's not forget that apart from IT, today we've had some of the other majors come in and perform as well. Power has been a good space. I just want to point out, by the way, if you were with us on Bazaar this morning, you would have heard that chat with Harshvardhan Dole. He pointed out a couple of names like NTPC and CESC. Look at what's happened to CESC. It's up about 6% last I checked. We'll get that back on the screen as well. That's NTPC. So power in general has been a very, very solid space. Let's get CESC if we can. Yeah, there we go, 5.5%. This is one pocket. Then there is the oil marketing arena, thanks to the fall in oil prices. So another very active part of the market. Looking good on the Midcap index, a gain of about 350 points. So how should you position yourself in this last hour? We have Mitesh joining in as usual. Mitesh, what a solid day it's turned out to be. What are the trades now? Index, stocks, or both?
Yeah. So I think, I was actually talking about this targets of 19,850 and we're practically there. My initial sense is that, book some long positions, cut down your exposure for two reasons. One, I think this is the area where the markets had made an intermediate high around the 17th of October. The intraday high we got that day, I think, was around 17,848 or 850 or thereabouts. And we have also run up too nicely away from the intraday hourly and 2 hourly moving averages. There's also a gap around this 19,870 mark. And therefore, I think, the idea is to lighten up your long positions. Maybe even on the stock side, I'll advise getting into slightly defensive kind of a portfolio buy signals where, the stocks are slightly low beta. Once we get a dip, I would want to re-enter again aggressively. But after riding this rally nicely from about 19,250 plus levels, I think here I'm tempted to take profits, given the fact that the technical setup suggests that there could be some profit booking around these levels. So I have a buy on Dabur with a stop at about 528 and a target of roughly around 550 to begin with. And the other one which I like is Crompton, which I would recommend buying with a stop at 281.5 for targets of 296.
Okay, all right. Mitesh, tell us about the big boy, HDFC Bank. I need to keep coming back to this point because that's the heaviest weight and that's not really performing. But it's bounced off, that 1450, 1470 level. It seems to have taken some bit of support out there. And now it's trying to find its form. If we plot a 200 DMA with this current chart that we have on the screen, it will tell you the picture out there because now that 1530 is where the 200 DMA is at as well. What do you make of it, Mitesh? Do you think it's ready? It's heated up now and maybe it's found support at lower levels because that's going to be very important both for the Nifty and the Nifty Bank.
Yeah, I think if it comes to HDFC Bank, my understanding is that the stock has been underperforming and now is just trying to give a bounce back kind of a signal. It's not still giving me a signal for big trend reversal, but a strong bounce back can happen. And in fact, as the market kind of consolidates, I do expect that some part of underperformance will be caught up by the stock. So I would want to see it as a trading buy. Keep a stop below levels of around 1500, 1498. That's the support area. And a bounce back to levels of 1550 is my first target. Then 1560 and then eventually 1600. So that's the 200 average area as well, around 1595, 1600. So I think that should be it. Still, from a trading point of view, it makes sense because the risk reward equation is favorable. But yeah, it's not giving signs of any major uptrend on the charts.
Okay, risk reward favorable, but not giving any significant breakout on the charts. Thanks so much for that. Mitesh, we'll keep coming back to you in the next 60 minutes to get your view as and when the show progresses. But just that chart of HDFC Bank actually showed you the picture that a 200 DMA actually has been falling and now the share price is going very, very close to that. That's the blue line that we're talking about. So that's an important level, 1,530 rupees. But let's focus on the top gainer right now, Hero MotoCorp. That's surging in trade. They have recorded the highest ever festive sales. Ekta joins us to tell us what's kickstarting that bike. Ekta.
Thanks for that. Well, yes, Hero Moto is in focus because it's recorded its highest ever festive sales. It has surpassed its pre-COVID-19 festive sales as well. It has recorded more than 14 lakh unit retail sales in the 32-day festive period, which is basically from the first day of Navratri to Bhai Dooj. Now, it has surpassed its previous highest retail of 12.7 lakh units, which it recorded in the festive period of 2019. It has, they have said, seen robust demand across rural markets plus steady retail offtake in key urban centers. They have seen double-digit growth in central, north, south and the east zones, and post-festive channel inventory is now down to the lowest they have seen in 3 years for Hero. They have said that this has set the company on a steady growth path for the rest of the fiscal year. So hence, the stock is looking up on account of this.
Got it. Thanks a lot for that, Ekta. Well, the stock has now moved to the high point of the day. Devin Choksi, MD of DR Choksi Finserv, joins us on the show. Hi, Devin. Good afternoon. Thanks so much for joining in. What do you make of this one, Devin? Did you ever fancy riding a bike, first of all, a two-wheeler? And what do you make of this Hero MotoCorp stock? After a while, we're seeing this sort of a move.
Hi, Nigel. Good afternoon. Well, yes, I think during college days, but now that is a long back. Certainly, I think the numbers are looking quite interesting for the entire passenger vehicle segment as well as for the two-wheeler segment. This festive season probably is one of the best festive season that one has seen as far as I think consumer spending is concerned. Both the discretionary and non-discretionary area, the products, consumer has been spending money, and it's getting reflected in the numbers that we are seeing right now. Maybe I think once the result comes out of this quarter, the third quarter, it would further look up, I think, very smartly. Fortunately, this time around, the top line is growing. There is no cost pressure. Inflation hasn't remained under control. Commodity prices have remained under control. And that is basically auguring well for the higher amount of growth in the profits as well. So watch out for third quarter. Third quarter results are likely to be exceptionally good going forward, including for auto companies and many of the consumer durable companies.
Okay, all right. So that's the take on Hero Moto. We'll get Abhishek and talk about the big story of the day, which is Bajaj Finance, in just a minute. But let's look at that move on IT. It's a big one at that. Devin, hi, good afternoon. Season's greetings and wish you a very, very happy, prosperous and healthy new year to you, your family and everybody in your offices. So the question is on IT because there has been this gush of buying all through this week. All these frontline stocks, they're up 4, 5, 6%. Do you think this is just a rub-off effect of what's happening with US yields and the NASDAQ moving higher? Or do you see fundamental reasons to buy IT right now?
Yes, Survi. Thank you so much for your greetings and wish you all the same. Well, I think the first leg of correction in the IT is that most of the IT stocks were short sold by many of the funds. And as a result of the better prospects emerging due to the likely fall in the interest rates going forward and the corrective spending, the companies, I think, which have been up till now withholding the spending, will now start putting money across the table and start investing into the technology blocks. I would think that going forward, the business situation remains absolutely convincing for most of the IT companies, which we have always been talking about. Currently in our markets, I think the first leg of rally is likely to be because of the short covering of the positions which most of the traders have put into place, including of many frontline IT companies. And in subsequent stage, I think the long building of the position. So maybe I think one could argue that even though the quarter 3 results of IT companies may not be very spectacular, I believe that I think the worst is over for most of the IT companies. Given the fact that the fundamental strength of the global economy is likely to demand more and more IT service-led recovery, I would think that I think Indian IT companies would probably be in demand going forward. So certainly, I think one would remain positive on IT companies and maybe mid-tier IT companies, which are specialists in the engineering and R&D segment. They would be probably, I think, better choice to buy into the portfolio, given the kind of growth rate that they achieve.
Okay, Devin, stay with us. Bajaj Finance is the other one, right? I mean, what a recovery from the day's low. The Reserve Bank of India, of course, ordered the company to stop loan dispersals via 2 lending products. Abhishek is here with the story, of course, which we've been highlighting, but more and more opinion which is coming through from the street and what you're making of it. Abhishek, take it away.
Well, to begin with, RBI has directed Bajaj Finance to stop disbursing loan in two segments, that is e-com as well as Insta EMI cards with immediate effect. Now, action is against the non-adherence of the company to the extent of digital guidelines issued by RBI in 2022 with respect to non-issuance of key fact statement to borrowers. Now, supervisory restrictions will be reviewed upon the rectification of the said deficiencies to the satisfaction of RBI. Now, this is the first time that RBI has issued action like this under digital lending guidelines. Now, Bajaj Finance is a systematically important NBFCs and it is AAA rated both by CRISIL as well as ICRA. Now, details of the products on which this restriction has come is that the total EMI card issued, that is card in force, is about 4.2 crores, which is up 21.8% YOY and about 10.3% quarter on quarter. In Q2 alone, the EMI cards acquired grew by 30% YOY and about 5.7% sequentially. Bajaj Finance has also given a response on the exchanges. They say that they do not expect material financial implication on the company on account of RBI's action. They will rectify on RBI's observation and comply with the RBI direction at the earliest possible. We have a brokerage note coming in from Macquarie, who has an outperformance rating and a target price of 9,190 per share. They say that the RBI order will make them monitor disbursements and AUM growth closely. Bajaj Finance had added about 3.58 million customers in Q2 FY24 and about 0.68 million EMI cards were acquired digitally, comprising 19% of total customers acquired in Q2 FY24. So EMI card franchises stood at 4.2 crore, which while digitally sourced EMI cards franchise stood at about 42 lakh, which is about 10% of the outstanding EMI card base. They think that the number looks high, and for this reason they are surprised by management's comment on minimal operational impact. How long will this RBI ban be in place? Historically, they have seen 12 to 18 months kind of a time frame when the RBI ban has been revoked. However, since the press release already states that Bajaj Finance has started issuing KFS, they think that the ban could be revoked in less than 12 months. Back to you.
Okay, Abhishek, thank you very much. That's an important story. Deven, you want to comment on Bajaj Finance, go ahead. But the broader NBFC space, so for the last 2 quarters, many had been telling us that maybe this is the peak for interest rates. The last quarter was not. But now maybe with generally a feeling getting stronger that rate hikes, etc., globally seem to be behind. And the bulk of it, of course, will play out in 2024. What are your top ideas there in the NBFC space?
So, Prashant, we believe that, yes, on one side, we are having a situation where the interest rate hike situation is over. And at the same time, gradually, in subsequent period of time in 2024, you should be seeing the gradual fall in the interest rate. And this particular move could possibly result into better amount of margin. And I think for that purpose, the companies would have relatively had and a stronger growth in the NIM portfolios. We believe that I think consumer lending is going to accelerate even further because amount of disposable surplus in the hands of consumer, and at the same time, I think the size of the balance sheets of most of the NBFCs and even the corporate credit banks, I feel that I think here on, you are likely to see higher amount of consumption activity continuing. And that could possibly result into the faster loan growth in the subsequent period of time. Given that situation, we continue to like the underlying strength of Bajaj Finance. We continue to like the proposition in Jio Finserv. We continue to like, I think, the lending books of ICICI, Axis, and even HDFC. So yes, I think these are some of the names which we continue to follow, and we believe that I think it's a good opportunity to buy them into the portfolio in any corrective downside for any reasons.
Okay, Bajaj Finance, actually, imagine that. It started its day down 4.5%, and now it's up 2%. It's raised to the highs of the session. A big move coming in over there. What else is on the move? Apart from Hero, there's buying quite evident in Mahindra and Mahindra as well, even Tata Motors for that matter. We had a couple of sort of down days for the auto pack. Today is a day where catch-up seems to be happening. Deven, anything else in auto apart from Hero? Looking at the trends and the strong festive buying we've seen, would you buy anything else at these levels?
So, Surbi, we have been convinced about Tata Motors, and for some time we have been putting our, buying list. I think Tata Motors, adding stocks into our portfolio in every corrective fall. We believe that the commercial vehicle story, particularly, is likely to unfold and unfold big time. Given the kind of money that the country is spending on infrastructure, given the kind of money which is being spent on building the industry through even PLI investments, and even the scrappage policy, the commercial vehicle segment is yet, I think, to perform. And that is where I believe that likes of Tata Motors, Ashok Leyland will have relatively better time going forward. Of course, the passenger vehicle portfolio of Tata Motors has been showing relatively higher amount of growth. And at the same time, having corrected their costs, high cost, I think, related issues, I think they have been able to manage those subjects well. I believe that I think the company is very well positioned for capturing the upside potential into the business. So any corrective downside in the stock price would definitely mean a good opportunity to buy into the portfolio on likes of Tata Motors.
Okay, all right, Devin, we will leave it on that note for this afternoon. Thank you very much for joining us on the show today. Need to take a quick break. We'll come back on the other side. Ajay Vora, Head of Equities at Nuvama Asset Management, will be with us. We'll keep the conversation going.
Okay, welcome back. You got the market, which is up 180 points. And, it'll be quite something if you have two back-to-back 200-point days. That'll be just something. And, how things have turned just on the back of that one data point. And, of course, what's happened with the global market as well. Ajay Vora is joining us now. He's head of equities at Nuvama Asset Management. Ajay, good to have you with us here. Good afternoon. Would you agree with the basic contention that, the picture for equities perhaps is seeming much better from a macro-ish standpoint? The clouds have all mostly cleared, unless, of course, we start to get a string of negative surprises data-wise. Perhaps, for the last year and a half, we were talking about hikes and hikes and hikes. Depending on which part of the world you looked at, it ranges between 400 and 500, 550 basis points of hikes. And now that is coming to a close, probably has already come to a close, as many believe. So that's the big macro headwind, which is out of the way now. Your thoughts?
Yeah, hi, good afternoon, Prashant, and thanks for having me on the show. So I agree to a large extent in terms of how the narrative has changed. And, I'll just point out, key things which I feel, because of which the whole setup is very constructive for the equities, Indian equities to do well from here on. Broadly, if you look at it, as you rightly said, the whole narrative on the global interest rate has reversed. And whether they start cutting or not, I think, at least there is some sort of agreement that the peak rates are behind us. Whether the cutting happens, the easing happens post second half of CY24 or later, that we need to see. But broadly, the interest rates have peaked. Second most important factor, which is playing out in our favor recently is the whole correction in the crude oil prices, which was actually turning out to be a big worry for our markets. But I think with the way that it has corrected by 15-20%, it is definitely a big positive for us. Third, and the most important thing, the result season has been extremely strong. If you look at the aggregate PAT growth for Nifty only, it has been closer to 25-26%. And even if you adjust for, the OMCs, it has been closer to 21-22%. And barring, IT and metals, all the sectors have resulted in a beat to the analyst expectation. So I don't think, you are getting any market where quarter after quarter you are seeing a reasonable upgrades. So that is the third and the most important, the fundamental aspect of it. And lastly, if you look at the numbers, over last 3.5 months, I would say FIs have sold close to $8 to $9 billion in secondary market. Considering, all the overhang of interest rates and the war which is going on and n number of factors, $8 to $9 billion of selling has been absorbed. I'm saying that, with all these constructive factors, even if they come back and, half of it gets deployed over next few months, we can see a continuation of this rally. So I agree with you that setup is looking very constructive. And still, I don't think we are expensive in terms of valuation. There can be pockets where things are very expensive. But I think that considering the results and the underperformance over last 2 years, I think this rally has more legs to go.
Okay, sounds good. Ajay, hi. Good afternoon. You're sounding quite bullish. Season's greetings to you, first of all, you, your team, and your family. So, if this rally has more steam, and if valuations overall are not looking too out of whack, then the next question is, what do you play? I mean, what do you buy afresh if this market's going to cruise past 20,000 once again? Your thoughts?
Yeah. Hi, Surbhi, and thanks for the wishes. Wishing you the same. Broadly, if you look at, I think if you recollect last time when I was on channel, we spoke about the whole OMC space. If you look at the numbers which all the companies have delivered, in fact, there has been upgrade of 30, 40, 50% by most of the analysts for the current year. And although they are being very conservative for next 1 year or 2 years, they are taking a 50% drop in earnings for next 2 years. Basis that earnings also, most of the stocks are trading at closer to 3P, 4P, 1-time book or 1.2 times book. I think, with crude staying where it is, the expectations on the marketing losses will go away. We expect, the GRMs, the refining margins to get stronger going into the next year with, shutdowns taking place globally. We think that the earnings momentum can continue from here on for next couple of quarters. So that is one space where we are positive. Secondly, we are also positive on the whole auto space. I think if you look at the whole, the setup over there as well, the urban market was doing well. And now with the rural market also kicking in, and, the export markets starting to do well, I think, the whole pack of auto, be it 2-wheelers or 4-wheelers, I think can do exceedingly well from here on. And lastly, we feel that, this whole NBFC space, we have generally seen that in a rising interest rate scenario, most of the banks which are CASA heavy, that ends up doing well. But in a falling interest rate scenario, I think if the rural market opens up and with the vehicle sales, touching new numbers, I think the vehicle financing side of the NBFC and the housing financiers can do really well from here on. Because, if you look at the real estate companies also, they are doing exceedingly well. So at some point of time, a market will start appreciating that, the whole housing finance companies are also, a couple of them are trading below one-time book, delivering 15-16% ROE. That can continue to do well from here on as well.
Okay, all right. Hi, Ajay. Good to see you. And Nigel on this side. So OMCs is what you like. Autos you've spoken about, and NBFC, the NBFC space as well. I think briefly in the past when we chatted, you also mentioned a couple of other names. Glenmark Pharma, I think, was one of those stocks that you liked. That's done quite well. And the banking names as well, the larger banks, HDFC Bank and ICICI Bank. You want to fill us in with a fresh list, or or any view on the names we've already discussed?
So firstly, Nigel, I would really thank you for always bringing this up on, one of the names which we have discussed since a very long time. And we end up chatting on it every time. But yeah, Glenmark is the one name where we are positive. And if you look at their recent results also, they have cleaned up quite a lot. And the debt is going down significantly for them, which paves the path for the, the next growth phase for them. So our sense is that the story continues to look very attractive. And, within pharma, there will always be stock-specific opportunities. So we like a couple of mid-cap pharma names also there, which we are very positive, which are domestic focused. Apart from that, the large cap private banks, I think the setup again over there is pretty good. The underperformance and reasonable valuation, you are getting two of the largest private sector banks at closer to 2.1, 2.2 times price to book, where I don't think you can go wrong on the valuation side. And if the credit growth continues to stay, healthy at somewhere around 12, 13, 14%, they will continue to outperform that. So my sense is that, private sector banks are looking good. And a couple of mid-cap pharma names are also looking attractive.
All right. But Ajay, I'm happy that I've remembered Glenmark Pharma and we have discussed it. 1-2 more names give us, right? I mean, when you're talking about domestic themes in the pharma space, what do you like from there? I spoke to an analyst at a conference that I went to recently, and they were saying maybe now it's the time to look at US generic companies. But obviously, you're saying that the domestic names still have potential out there. So if you could name a couple of them, or from any other sector, so we have a couple of stocks that we can discuss in the next time when you join.
So I think, one name which is beaten down and surprisingly that has done exceedingly well today in the market is Wokhard. If you look at that company, they have a strong domestic business. What was not working for them was the whole US business because of the facilities being under inspection and all. But my sense is that the product pipeline which they have right now, and if a couple of products get approved by US FDA, and we feel that those are very critical products for the US market also, then the whole the profile of the company changes, because then the facility inspection and everything will follow through. And if you look at the current market cap, and if you look at the current EV, if you compare that with any other domestic business also, stock is looking very cheap from here on. So with a 4,500 crore market cap, their only domestic business itself is closer to 1,000 crores, 1,000 crore plus. So my sense is that, if these couple of products, end up getting decent approval and the facility also gets approved, I think the risk reward ratio is pretty favorable from here on. So this is something where, where we are a little positive from here on.
Talk about a name or two more, Ajay, as you were going to, I'm sure.
Sorry?
Talk about a name or two more. I mean, ideas we can discuss.
No, I think so. Generally, Prashant, we are pretty constructive on the whole mid-cap space. I think, I remember 3-4 months back when I was on channel, we did discuss about the whole mid-cap space looking very attractive. And we continue to maintain that view, although, at every level we get a pushback saying that, it has moved quite a lot and, it's kind of a frenzy what is going on right now. But honestly, Prashant, if you pick spaces, be it, textile exporter or any of the, consumer durable exporter, a very niche consumer durable exporter, and couple of other spaces also, you can find names where, things are looking very cheap even now because the outlook is just getting better for all these companies. So my sense is that, mid-cap has always been a stock-specific market. One cannot generalize saying that, the whole space is a bubble or is a frenzy. You will end up getting very good ideas in certain pockets where, stocks can move 30, 40, 50% or maybe more basis their earnings outlook.
Okay, Ajay, finally, before we let you go, just want to talk to you about the sector of the day, really, the kind of buying intensity that we're seeing in IT. And it's not just large caps. I'm looking at the mid-cap screen right now. Look at KPIT Tech, look at Coforge, Memphis. All of these stocks are really sort of flying high and high. Do you like this space, A? And if you do, then what sort of companies would you play through? Big, small, niche, or full service?
So, Surbi, honestly, this is the space which had the largest overhang of higher rates for a fairly long period of time. And therefore, if you see large cap names like Infi, TCS and all, they have underperformed the market in a very big way because, globally, the interest rate scenario and its impact on most of the global giants was expected. And therefore, there are two data points over here. If you look at FI holding in IT sector, that is at its lowest level right now at closer to 10%. Versus index weight of closer to 14-15%. And if you look at the derivative positioning also, the highest shorts are in this particular sector. So therefore, now with the narrative changing on the whole interest rate, you'll definitely see some sort of interest building up in this sector. And I personally feel that, more money can be made on the mid-cap IT side rather than large cap, because large cap honestly is not that cheap. Even if you do the numbers, large cap names are trading closer to 23 to 25 times like Infi, TCS. And, mid cap names where the growth outlook is very positive, they are still trading cheap. So I think that the mid cap IT space can do really well from here on.
Okay, mid-cap IT, that's where your eye would be. Got that. Ajay, good talking to you today. Thank you very much for taking out the time and being with us this afternoon. We do have to take a break on that note. With the news, the markets, all guns blazing, literally, large caps or mid caps. We'll take that break, come back and tell you what's the buzz in the dealing rooms today. Nimesh is back with the D Street chatter. And then some final trading calls coming up with Mitesh as well.
Okay, welcome back. You've got the market, which is, we're trading very, very strong, but there's a bit of a dip. Look at that. I mean,
I think we should just pull up the Nifty Bank.
Yeah, let's
That's
pull
the
up
only
the
one.
Nifty Bank and take a look at what's happening. So the Nifty is basically lost, what, 80 points, 80, 90 points from the day's high. And the Nifty Bank, I think, is the big reason.
Expiry phenomena, 3 o'clock?
Yeah, which is down about 60 points. Let's pull up the Nifty IT Services Index as well. Because that is the index. It's not that the Nifty Bank was rallying, very hard. The IT index was rallying very hard. But there is, I mean, maybe, if you count the index point contribution to this dip, because the IT index was up over 3%, maybe, yes, there will be some pressure, but an absolute sell-off across the board coming through as we approach the final 20-25 odd minutes of trade or so. We'll pick out individual stocks, etc. as well, where this pressure is coming from. But, we have Mitesh with us. Mitesh, as we speak, you can see what's going on your screen. What do you make of it? I think, Mitesh, sorry, go on.
Can you hear me? Audible?
Yeah, now we can hear you. Go on.
So I was talking about the fact that I would expect supply around this 19,850, 870 mark. Historically, there are multiple levels that, they should be looked at. One, I said historical tops. Two, there's a gap down. And three, I think the intraday charts had run away too much from their moving averages. We advocated strongly booking some par profits and shifting up your portfolio to defensive side. I think that's the approach we'll make. It'll take some time to get past 19,850, 870. So I think wait for that dip. I think it's already started. And the preferred level to buy the index now would be closer to about 19,680, 650 zones in case you get it there. Or maybe, we'll see whether the dip gets arrested. But for the time being, the initial feeling is that 19,680, 650 could be the area to buy into the index again. So, yeah, I think, it makes sense to, if you would have heard me about for 30 minutes back, I would have advocated the same thing, that please take some profits on long positions.
Well, the market seems to have heard you, Mitesh, because this is a really sharp and savage fall that's come in. Started with the Nifty Bank, but it's extending to some other stocks as well. Pull up the intraday for a TCS, for instance, and there's a decline coming in on that stock. Tech Mahindra is losing some ground as well, HCL Tech. So along with the fall in the Nifty Bank, we're seeing some of the IT stocks cool off alongside. So yeah, IT and banks, that's where the bulk of the profit taking is happening. Mitesh, just very quickly, any more advice, any fresh trades now, looking at the way the screen is turning so sharply?
So on the stock side, I think, again, the idea would be to, one, even if you take long positions, it should not be aggressive. And I have got one buy right now as a BTST kind of a call. Apollo Hospital, I think, it's just made a fresh high and still looks very strong to me. It's come off the highs as well, just like other stocks, but I think the overall pattern suggests that there's a stronger chance of the stock going up. So keep a stop below 5,300 and, look for a trading target of 5,390, 5,400 for tomorrow. And the other one is Havells, which I would recommend a BTST with a stop at 1272 for targets of 1295.
Got it. Okay, thanks a lot for that, Mitesh. Well, you just pull up the Nifty and the Nifty Bank. The Nifty Bank went into that resistance zone that we were mentioning earlier, the 50 and the, the 100 DMA. And from there, it's corrected a good deal. It's corrected close to 300 points. And that cut has come just, I think, in the last 20, 30 minutes or so. And that's the reason why it's putting pressure on the Nifty. Keep in mind, the Nifty also has weekly expiry that is playing out. And earlier in the session, some of these puts were getting written at will. Now let's see whether or not they get trapped on the wrong side, because that 3 p.m. move has come about. But Nimesh is joining in to tell us what he's picking up in terms of D-Street chatter. Hey Nimesh, great game yesterday for you to go ahead and witness. But tell us about what you're picking up in terms of flows.
Hi Nigel, I guess from a market perspective, the vertical fall, what we are saying, is largely on back of a large basket selling. That was the feedback in the morning, that there is going to be a large basket selling. Market at close is what they mean. And that was a long list of stocks, from the large institutions. So maybe that explains a vertical fall, not only in the Nifty, but in the Bank Nifty and in the IT names as well. While the markets were rallying in the first half, it was more on short covering than genuine buying from the larger institutions. I guess the only segment which is doing good, and there is flows as well, is the broader markets, and that has relatively been outperforming even in today's trade. Even as far as IT is concerned, well, the IT index was up nearly 3%. But the feedback was the rally in the IT stocks today was largely on short covering and not fresh buying. So the overall feedback is while there was a big move in the first half, it was largely on short covering, but the flows are on the negative side, and potentially you will see a negative figure largely on back of this big basket selling in the last 30 minutes of trade.
Okay, yeah, this literally came out of nowhere. Anyway, any chatter on stocks, Nimesh?
Well, there are a lot of stocks which are buzzing in trade, largely from the broader market. So the first stock on my list today is Indiabulls Housing. It's in the band, but there is a delivery-based, cash-based buying happening from larger HNI. So that's the reason why in today's market that stock is buzzing in trade. So that's the first one. The second stock is all cargo terminals. It's not the all cargo logistics, but the other demerged arm. So that's buzzing in trade, up 15% on very large volumes. I understand there was a large volume there, and leading FI was a seller in today's block. Looks like a clean out trade, and after that a big move in that stock. So that's the second one. The third stock is Manappuram Finance. Post earnings, we've seen a big move in that stock. Even in today's trade, it's buzzing in trade, and largely on back of strong buy flow. So looks like some larger institution interest is back in that stock, and it's a big move there. And the last one is Glenmark Pharma. Again, this is one stock after earnings saw a bit of a correction, and after that you've seen a bit of an up move in that stock as well. For the last few days, the feedback is some leading family offices and a domestic mutual fund is quite active buying into that stock, and hence a big up move in that stock as well.
Okay, all right, Nimesh, thanks a lot for that, for giving us the entire flow picture as well as individual stocks what you're picking up. By the way, just pull up ITC. That stock had a big rally. In the last 18 months or so, it re-rated, went to around that 500 rupee mark out, but from there it seems to have lost its way. Even today, that's a larger weight, and that's slipping as we speak. HDFC Bank as well went to around 1,515 rupees. And from there, it was getting nervous, getting closer to around the 200 DMA. So HDFC Bank as well is another one, and that's another big weight in there. So that appears to be the reason why the markets are under some pressure. As Nimesh said, appears there's some large basket selling as well that was due. Well, let's get an update on the Yuko Bank technical glitch. Then the Kolkata-based lender has recovered a large part of the money that was transferred into its customers' accounts after a technical glitch. Ritu Singh has been on top of this. She's joining us to fill us in with more on that. Hey, Ritu.
Hey Nigel, this is as bizarre as it gets, and Yuko Bank has now revealed details of the amount that was wrongly credited into accounts following a technical glitch in IMPS transactions, and it turns out as much as 820 crore rupees was erroneously transferred into Yuko Bank customer accounts without any actual money being received from the remitter banks. Now, earlier this morning, Yuko Bank clarified that it had blocked the recipient accounts, and it has been able to retain and recover about 649 crores out of this 820 crores, which is 79% of the amount, and initiated requisite actions to recover the balance amount as well. Since this clarification was made to the exchanges, we reached out to the bank, and we understand another 9 crores has since been recovered, taking the total recovery to close to 80% or plus thereabouts at 658 crore rupees. Now, we spoke to various officials in the bank to understand how this error occurred, and it turns out that when customers from other banks sent money to Yuko Bank customers, a technical snag caused the Yuko Bank system to send out a transaction fail message to the sender banks, which made the money go back to the senders, even though it had actually been correctly credited to the right recipients in Yuko Bank. So on one hand, you had the recipients getting the money, but also the senders getting the money back, and the money being credited on both ends. Now, we understand that there are about 6 or 7 other banks from which such transfers were made to Yuko Bank customers. The bulk of these transactions, by the way, they took place on Diwali on the 12th of November and the morning after. Now, while the bank did not explicitly say if there was a cyber attack or what the reason behind this is, all it has said is that there was an internal glitch. It has reported the matter to law enforcement agencies for action, and that we understand includes the cybercrime cell as well as the CBI.
Ritu, so what does the law say? You credit my account with a couple of crores, I go out and spend it, and then the bank says, well, give me the money back. I say, I spent it.
Oops.
So what do you...
Wish it was my account.
Well,
we're just wondering like what the options and possibilities are.
649. Well, that's exactly what's happened. The bank sent the messages to these customers that, this money has been erroneously sent, and some of them sent it back. But it found that some of the customers had taken the money out of their Yuko Bank accounts and transferred it elsewhere, which has made the task of the bank a little harder now.
And Ritu, on a lighter note, I'm sending you my details in case you know any of.
You have a Yuko Bank account? No.
Everything is accepted. Thanks a lot,
Thank
Ritu,
you.
for joining in and giving us that quick update. Weird things happen, and that's one of that.
Can you imagine Diwali, nice festive mood.
Imagine suddenly lottery.
You see a message in your phone saying, well, your account has been credited by, I don't know, whatever amount.
Yeah. It's like the end of the month, when sometimes you're waiting for your salary to get credited, and suddenly you get, your bank alert coming up, and actually it's the EMI that's gone, the salary's not come.
The reverse of that, right? So.
Oh, well, no one's getting any free credits here, guys. Let's move on. We've got Amrish Balika joining us on the show this afternoon. Amrish, thanks for joining in. Season's greetings to you. Hope you had a great Diwali. So, I don't know, it's a season of some sort of misgivings here and there. There was this Bajaj Finance story in the morning. Now, Yuko Bank with this technical glitch. Not sure what's going on, but your thoughts on both of these stocks?
Bajaj Finance, I think clearly that's a negative. Although we saw the stock opening lower and then there was buying at lower levels, but then I believe this is clearly a negative for Bajaj Finance. As far as Yuko is concerned, I think it really puts a question mark on the systems and checks and balances. Although those who have received the money, I think the onus is them to return the money, because since erroneous credit doesn't mean that it's free money. It has to be returned, but then I think it'll take time, especially those who have transferred the money or have used up to buy during Diwali. I think it'll be a bit difficult to recover that money. I think that'll take time.
I tweeted saying the market's seen a sharp sell-off. Somebody replied saying market realized we'll face Aussies for the finals. I think, well, that's maybe stretching it a little bit, but. That's a mood we seem to be in. But, it's a sharp sell-off. And that's the story of the last 1 hour or so. Nice, smooth going. And then there has been a bit of a sort of, drop-off which has happened. And it's been kind of led by banks. The index which is sold out the most is banks. BEL, Amrish, is your pick for the day?
Yeah, Prashant. BEL is a pick for the day. And as we know, it's into defense electronics. Primary provider of radar communication and electronic warfare technology to Indian defense forces, and they're also exporting now. And among the civilian products, they make those electronic voting machines, which again would be in demand because of the election season. Other focus areas for this company is civil aviation, metro systems, and railways. And they have about 9 manufacturing units and 4 research facilities. And if you look at the R&D spend, it's about 9% of revenue. And going ahead, it should be about 11% is what the management is talking about. 800 crore capex is underway. Around $300 million of export book is there. If you look at the total order book position, it's about 68,000 crores. And with the rising defense spend across the globe, including India, I think BL is in a very sweet spot. Q2 earnings were decent. EBITDA moved up by about 17% Y-on-Y, about 51% Q-on-Q. If you look at the PAT, it improved by 26% Y-on-Y and about 47% Q-on-Q. For FY25, I'm expecting an EPS of about 6 rupees, and my target for this is 180, which is a decent, close to 20% higher than where we are now.
Got it. All right, Amrish, thanks a lot for that. Just hang on with us. For the time being, we need to take that mandatory break. We come back and we'll discuss a couple of more stocks with Amrish and we'll wind down the markets. Don't go anywhere.
Welcome back. Well, we're in the final leg of today's trading action. Amrish Baliga is still with us. Amrish, we were talking about some of these, financial stocks. One of them has had a fantastic week, and that's Manappuram. Right after the numbers came out, it's up another 7% today. Your thoughts on this one? Would you look at a buy at all?
Not really. In fact, I would possibly utilize this move to book out to a certain extent because I really don't see the margins holding up for these gold finance companies going ahead. I think the NIMs are falling for everyone, and I think it won't be any different for this set. So clearly utilize this up move to book out.
All right, Amrish, thanks so much for joining in and giving us that view. On Manappuram, I'm just wondering, Nimish also told us that the flows are quite strong. But the kind of move that we've seen on the stock, is the street expecting something else besides numbers, besides valuations? It's up 7% today. Pull up a week-to-date chart where the stock has seen a sharp uptick. I think we should get that as well up for our viewers on the screen. It's up close to around 15%. I recall we were on the show when the results came, and the stock was a little sideways, and then in fact it's taken off from there. So that's about Manappuram Finance. Massive volumes out there, numbers are very decent, trades at a bit of a discount to some of its peers, but is the street sensing something more? Well, time will tell on that one. Well, let's start winding down on the markets then.
Yes, absolutely, Amrish. Thank you very much for taking us through the close today. And a close that got a little wobbly, you'd have to say. That sudden decline that came in started with the bank Nifty. It has taken the Nifty well off the peak. We still have a gain, no problems about that. But this volatility is something that the traders will remember. Sudden profit taking coming in. 80 points higher for what it's worth, of course. Still a strong day. If we talk about the winners, and it's tech names right from the front, that was the big leadership point of the market. Tech Mahindra, HCL Tech, TCS, Infosys, LTI Mindtree, they're all packed up together on the top side of the Nifty. Gains anywhere between 2% to 3%, depending on which stock you're picking out. Then you had the autos, where there was a strong traction coming into Hero Moto. Hero Moto saying that their festive season sales have actually exceeded pre-COVID years, and that worked very well for the stock, 3.5% up over there. It had company in the form of Tata Motors, M&M, some of the others doing well too. Titan had a decent session, so did ONGC, about 1% up on these stocks as well. Now let's come to the banks, because that's where the trouble was. Axis is ending at the lowest point of the day, 1.5% lower. ICICI Bank on the downside of the screen as well. Let's just check the final rates on HDFC Bank, losing some ground, just 0.25%, nothing more. And Kotak Mahindra Bank also completely flattening out. So the problem really was on the banking side of the market. That's where the pressure was. Coal India, of course, some profit taking, but you can't blame the stock for that, considering it's a massive move coming through. So those were some of the big movers on the way down.
But the party continues in the broader markets. Wokat, one of those stocks that have been a rank underperformer. We had Ajay Vora of Nuvama who said he believes that the story could turn around from here on. Stock was up close to around 15% today. Yet Sterlite Technologies as well, that was up close to around 9%. And some of these other stocks, that have actually been ignored, some of them big value eroders as well, whether it was Dish TV, whether it was Z Media, Suzlon, all of them, they were those stocks. In fact, people were wondering whether or not they'll survive. But today, they're one of the top volume gainers in trade today. And Vodafone Idea on its way to 15 rupees. That stock as well was up close to 2%. So from the broader markets, things well and truly on. The Nifty Bank needs to find its form. The Nifty wants to get to around 20,000 odd, but not without the Nifty Bank finding some form and getting past that 50 and 100 EMA.
Absolutely. I'll add some more names. VST Tillers and Tractors, they sort of showcased some 3 new tractors, including, I think, some EV machines as well at the Hanover Fair in Germany. That stocks ended 8% higher. Started the day very quiet, but then it just kept on piling up momentum. CESC, again, you heard Harshvardhan Dole on the channel in the morning, singling out this stock as perhaps a good play on the power side if you want to play the thermal edition. It's had a great session today, 4-5% on the higher side as well. So I guess mid-caps, Prashant, not bad. But yeah, this wobble, tumble, suddenly last half hour, I think that'll make people maybe a bit nervous.
Possibly. But, 400 points in 2 days, 450 points in 2 days would have been a little too much in any case. So maybe we would have been saying tomorrow morning that maybe take a little bit of profits. Better to take some profits if you're trading, right? So it's happened naturally today. Maybe not a bad idea after all, not such a bad thing after all. But yeah, lots. Put up Kalyan Jewelers if we can. That continues to pull back, and by close, it's down about 5.5%. It's got humongous volumes, and it's down very sharply. So that one has been selling off for 2 days now. Recent high was about 360. and it's come down to, it's basically lost about 20% from that level in just 4 or 5 trading sessions
now.
You know,
I remember our interaction with Kalyan just yesterday, where they went on to very carefully explain how the business model is now going to be more skewed towards the franchisee side of things, and margins will come down. I don't know, maybe the street perhaps took note of some of that commentary.
Possible. Yeah, I mean, so, and by the way, market breadth also converged. 1,250 stocks are higher and about 1,150 stocks are lower. So the gap is just about 100 odd stocks by close. I think that brings us to a close on this edition of Closing Bell. We are up about 90 points, which is a very, very respectable score on the board by the close of the day, 19,762. It's a wrap from all of us here. Goodbye. Thank you very much for staying with us. Don't go anywhere. Our Thursday special Big Deal is coming up next.